When will it end? Will I ever get my money back? Is it even worth owning stocks? These are the questions investors ask in a real bear market. Not the ones that end in a month, the ones that don't. In academic finance, risk is defined as the standard deviation of returns. A market that bounces up and down looks risky, even if every decline is quickly reversed. But that's not how risk feels. Real risk is a market that falls, then falls again, and keeps falling. A market that takes years, not months, to recover. One that forces you to sit with losses long enough to question your assumptions, your strategy, and eventually your resolve. History is full of stark examples. In 1973 to 74, the S&P 500 fell roughly 50%. Investors waited 7 years just to break even. The dot-com bust, another 50% drawdown, and another 7 years to recovery. Just as investors regained their footing, the global financial crisis hit, down 57%, 5.5 more years to recover. Those weren't interruptions. They were extended episodes of loss, uncertainty, and psychological strain. That is what risk feels like. And it is why equities have historically offered a substantial risk premium. What's striking today is how absent this experience has been. COVID, down 34%, recovered in 6 months. The 2022 drawdown, more prolonged, but still cleared in 2 years. Liberation Day, erased in under 2 months. The most recent 10% drop, undone by 14 straight up days. Declines have been brief and recoveries swift. Sustained loss largely absent. And at the Cornell Capital Group, our concern is that current prices reflect very little in the way of a risk premium. But why should they? If every decline is met with aggressive dip buying and rapid recovery, then risk, as investors experience it, appears minimal. The implicit lesson has become, hold on, buy the dip, wait for the rebound. There are no prolonged bear markets, only temporary dislocations. And that belief works until it doesn't. With retail equity holdings at record highs, the real question is this: what happens if the market delivers not a quick correction, but a prolonged grinding bear market? Not a drop that reverses in months, but one that unfolds over years. That is the kind of risk the market has historically priced. And it is not the kind of risk the market appears to be pricing today. We may be dancing on thin ice. For more information, please visit www.cornell-capital.com. This podcast is being made available for educational purposes only and should not be used for any other purpose. The information contained herein does not constitute and should not be construed as an offering of advisory services or an offer to sell or solicitation to buy any securities or related financial instruments in any jurisdiction.